The smallest position in my portfolio right now is InMode. About half of the market cap of InMode is in cash and cash equivalents. The company has been growing at a rapid rate. What they do is that they build beauty products. I'm not going to go into the details, but these products are revolutionary and there is a high market for it. But they are also expensive. And the way that physicians have been buying those products is through loans, through leases. And with interest rates going up, the sales have been going down for the company. But the fact that they have about half of their market cap in cash was the main reason why I invested in the company. Probably they should have been buying back shares. Unfortunately, this is not what the management is doing. They are quite shy about it. And that's why I'm not so eager to increase my position in InMode right now. Next one is a company which is buying back shares at a rapid rate, a buyback cannibal, AutoZone. I bought shares of AutoZone last year, but unfortunately the stock price went up and I could not really increase my position that much. And now I'm just holding on it. I believe it is a little overvalued. Will I sell? Not really, because I have much cash in my portfolio and I would rather own a good company than stay in cash. But now if all the cash is gone, I've invested in something else and I need more cash, AutoZone will be one of the first stocks to go. When a stock gets overvalued, you need to know when to take profits, just like I did with Apple, which was once the largest position in my portfolio. Now it is the third smallest. Northeast Bank is a recent addition to my portfolio. This is not a company I've talked about before. It's a very interesting regional bank. What they do, the main business, unlike other banks, is that they buy loans. Instead of just originating them, they buy loans that are discounted. Of course, they have a good management that knows very well how to analyze these loans, how to find the intrinsic value of these loans, and then to buy them. And if we look at the interest spread for this bank compared to other banks, it is one of the highest I have ever seen. And it is growing at a rapid rate. I want to buy more of Northeast Bank, but the stock price went up and now it is not that undervalued anymore. The next one is an undervalued one, Alibaba. Still, the margin of safety right now, I don't see it because I have been buying Alibaba for 3 years. The stock price has been going down and down. It has recovered a little lately. I won't say that it is overvalued. I won't say that this is a bad investment. But the fact that everything happening in China with the economy, I had to increase my margin of safety. And today, I don't want to invest more in Alibaba. My position is good enough. With the next one, Ascent Group, I actually had to lower the intrinsic value of the company. Not just the margin of safety, the intrinsic value of the company itself, I had to lower it. How much I thought it was worth, I believe it is worth less than that. And the reason is because they have diversified now into title business. It's a good business if you're considering just the float. It is better at generating float compared to mortgage insurance, which is the main business of Ascent Group today. But to grow the title business, it is costing them a lot of money. And I believe, and I don't know if they are going to succeed in the title business, but so far, I cannot give that part of the business really a positive intrinsic value. I had to deduct it from the intrinsic value of the overall company. The next one is a company I have been holding since 2016. It's JP Chase, the largest bank in America. If you look at market cap, the largest bank in the world. Today, I will say that JP Chase is the most overvalued company in my portfolio. I'm quite conservative with investments and I believe that JP Chase is overvalued today, for me at least. Why I'm not taking profits? I don't want to stay in cash. I would rather be invested in JP Chase. Of course, if I see an investment trading at 40% discount, and I need the cash, I'm going to lower my position on JP Chase. This is not the case today. My best investment in China has always been the next one, China Mobile. Many people are thinking of buying Chinese tech companies. There is nothing wrong with buying Chinese tech company, but you have to understand something. There are two economies running simultaneously in China. The old economy, where you have companies that are owned by the Chinese government, such as China Mobile, PetroChina. These companies are controlled by the Chinese government. And then you have the new economy where you have these tech companies like Alibaba, you have Tencent, all these companies, and even smaller companies. I believe if you really want to have exposure in China, you need to look at both of them. And in recent years, the old ones have actually been outperforming the new ones. This is a company with a high dividend yield. Almost all of earnings are returned to shareholders. And it is safe. One of the reasons why Chinese tech companies are underperforming is because people are worried about the Chinese government taking control of these companies, doing something bad about the company, about the economy. But these companies, like China Mobile, they are owned by the Chinese government. 75% of the company is owned by the Chinese government. It is paying a high dividend to the government. The government is happy for the company. But unfortunately, this is an old company which is not going to grow at such a rapid rate. Nevertheless, the fact that they are paying such a high dividends, I believe it is a good investment. And I have invested in the company maybe 4 or 5 years ago. I have stopped buying, but now I'm getting paid the dividends. Next one is Lululemon. I only started investing in the company this year. This is retail. And whenever we have retail, I want to take a bigger margin of safety because especially with such products, when there are trends, sometimes the trends change and people are not interested so much anymore with the products. Lululemon is a company growing at a rapid rate. But because it is retail, there are issues with China, with the US, growth in the US, but they are growing in other countries in Europe. I wanted to take a big margin of safety. And that's why today I'm not buying Lululemon anymore. But I won't say it is overvalued. Actually, it is undervalued. But for me, as an investor, the margin of safety I'm looking for, it is not here. Next company on the list is probably the best stock in my portfolio, the best company in my portfolio. I have made a video about it. It is Booking Holdings. Why I like this company so much? It's because of the way it operates. It is so efficient at growing. Just because a company is growing doesn't make it a good investment. Because to grow, you need capital expenditure. And you don't want a company to be spending that much money to grow. Each dollar that the company is putting in growth, you want more dollars over the long term. Let's say the company puts $1 today. After 5 years, you want maybe $2 from that $1. But Booking Holdings, they barely put any dollar and they are still growing. It is so efficient at growing. If you think about it, it makes sense because they don't really need so much capital expenditure. They don't own any hotels or anything. They don't need to do renovations to the hotels. Maybe they have servers or they have to operate, that's all. And based on the cash that the company is generating, the way that it generates its cash, you pay in advance and then it is going to go on the books in the future when the transaction actually happens. The company then have all this cash that is a liability on the balance sheet, but they can return to shareholders, and they are doing it. Booking Holdings now has a negative book value based on how much shares they have bought back. The next one is the most undervalued company in my portfolio. It is Crocs. I talked about it last week. I said that the market really misunderstands the impact of HeyDude, which is a company they acquired at a high price a few years ago. Unfortunately, HeyDude is underperforming. But you look at HeyDude, it is profitable, and there is no reason for Crocs stock price to trade at 7 times earnings today. I'm investing in Crocs. It is another company that requires little capital to grow. Many people don't understand that. They think shoes, this is retail. Yes, it is retail and have a margin of safety which is bigger than usual. They think shoes, you need to put a capital to grow. But when you have a strong brand that people recognize and you have delegated the manufacturing to other companies, the capital you need to grow is not that much. You just need to partner with the right people and you're going to expand your sales. Another overvalued company in my portfolio is Meta. I will make a video about Meta very soon telling you about why I believe it is overvalued, but I still believe that it's a good reason to have such a high portion of my portfolio in Meta. First of all, I'm very conservative when I calculate the intrinsic value, and I gave a negative value to the whole Reality Labs / metaverse business. When in reality, probably it is going to work over the long term. But right now, I cannot give it a positive value because it's just a bet. But the fact that they are making this bet, they're the first to make this bet, means that if it works, there is a high probability that they are going to be the first to make money. It's like investing in Google maybe 15 years ago. They were the one investing the most in the internet, and today the internet is somewhat synonymous to Google. In the case of Meta, they already have an ads business which is doing very well, which is growing at a rapid rate. Their Reality Lab business, this is a side hustle that they are doing. It may work, it may not work. I hope it works. But the main business itself is doing very well. We had these issues in 2022, but they were able to solve these issues. They are more efficient than ever. Looking at how my portfolio is, those companies which are currently undervalued, the companies I'm buying, I believe that Crocs very soon is going to surpass Meta as my third largest position. But will it surpass the top two? I don't think so, because I'm still buying those stocks. It is, first one, let's talk about Wise, which is the second largest position in my portfolio. It is a company that is used normally to transfer money internationally. If you want to send money to someone in another country, you use Wise. You can use PayPal, but Wise is much cheaper, even compared to banks. But they are not a bank. They are not like PayPal. They have a simple business model that the money actually doesn't leave the country. It is a company growing at double digits. They don't need a lot of capital to grow. And Wise has diversified its business. It now allows its users to have an international bank account. In other words, you can store foreign currencies on the bank account on Wise. But it's not a true bank account. They are not a bank. They have partners. They have banking partners that allow them to do that. Being not a bank, they cannot really pay interest in most countries. And with interest rates going up, there's been a lot of interest that have been increasing for the company on the cash they are holding for customers. This was an additional income for the company, but now with interest rates going down again, the market is not happy that this part of the business is not going to do so well. But the company has said that this is cash that they don't need, and they are not going to use it for operations. They don't want to get addicted to cash that is not going to be here. So we should not really include this cash, the extra income, in the intrinsic value of Wise, which I have done. And I believe today Wise, a company growing double digits a year, is undervalued. And the top position in my portfolio is La Française des Jeux, FDJ, which is the French lottery operator. It is a monopoly. They don't have any competition, but now they are trying to have competition by entering the online betting market, which is something very popular in Europe. If you're in the US, you would think gambling, this is something that people don't really have a positive view of, but it's different in Europe. The main reason why I invested in the company is because it is undervalued. They are paying a dividend of about 5%. They recently acquired Kindred, which I believe was at a big discount. So we can expect that the dividend yield of La Française des Jeux is going to increase in the coming quarters, coming years. They have been increasing dividends. They only became public recently. They were initially owned by the French government. This is a company that is always going to generate cash and return it to shareholders. So every year, I don't need to add that much cash to my portfolio. I have already a company that is giving me cash to invest in other companies. And it is undervalued. So I believe the stock price will appreciate. Even if we don't count the dividends, the stock price will appreciate. These are the 14 stocks I have right now in my portfolio. As I told you, the best one is Booking Holdings. I will recommend you watch this video next. Have a nice day and goodbye.